Welcome, Blockhead traders. I must inform you here at Blockhead Traders, we are not financial advisors. Everything we say should not be considered financial advice. Here at Blockhead Traders, we share our own thoughts and opinions. We do this to provide you a reference point for you to provide your own financial direction and decisions. Today is Sunday, March 21st, and this is Blockhead Traders Weekly. This week we have two blockheads on deck. Myself, Sprocket888, and Viper XL007 joining us as well. We're going to do a quick look back and look ahead at the trading week of last week and upcoming. Then we're going to dive into the weekly topic, which this week will be price levels. And you're going to see how we are starting to learn about price levels ourselves and chart them and use them in our day-to-day trading. Before we jump into all that, I want to give a friendly plug for our Discord room. You can find a link in the description of this video below. Basically, that Discord room is a trading community of beginners, people more skilled than others, but it's a friendly community where we're all there to help each other and learn each other from there. Myself and Viper XL007 do hang out in there frequently. I'm in there almost all during the trading day as well as in most evenings. Pop in any kind of question you have. Give any feedback that you might have, any topics you want us to cover, anything you're not sure on understanding, and we would love to chat and help further your education in both options trading, equities trading, the financial markets in general. There's a couple of good resources in there, and we're slowly building up. So I highly recommend you check it out and join us and say hello. So starting off this week, don't have a lot of feedback on the week past. Lots of rotation continued on in the market. The Federal Reserve came out and very strongly stated their opinions on interest rates and the economy, and that they have no intention whatsoever of raising the interest rate pretty much through 2022. This gave kind of a little bit of a boost to the inflation fears, and the Treasury yields continued to rise throughout the week, driving tech down. Tech didn't really crash, let's say, but it was on a rally a little bit for most of the week, but it did fail at the end of the week to make a new higher high. So I'm kind of looking, there's a support level down below that we can pull up a little bit later when we're looking at some of the charts, but I'm kind of watching that level to see, does that level hold up as it gets tested again, potentially this week. If there's a downturn in tech, that would kind of let me, if it holds, I'd be more at a horizontal opinion. If we make another run at the level of resistance and we actually make a higher high, then potentially we could be swinging up a little bit on tech. But for the most part this week, I'm not planning on entering any new trades. This is about the end of my option cycle for the month. So this Friday will be 21 days to expiry on most of my options for the month of April. And so this week is really where I'm looking to either close out positions at profit if they happen to be there, re-examine my thesis on some of the other ones to figure out if I want to roll them forward for another month, give them a little bit more time. I'm under on several of my options, but not that many. So really, it's just kind of a management week for me. I'd like to remind you guys all that you can check out all of my open trades as I put them on and take them off at Theta Gang. So you can find me at thetagang.com/sprocket888. I'll also put a link of that in the description below, and it's in the Discord channel as well. So you can see all the trades that I do, good or bad. Basically started tracking them in the beginning of 2021, and it's an open book. So you can see everything that I've traded. So I'm going to toss it over to Mike and get his views on the week past and the week ahead.
Yeah. So similar story of not having a whole lot on the radar this past week. I mean, as I mentioned last week, I have a number of positions and plays on in tech, and midweek I was feeling pretty good, and then by the end of the week, not as good. Those were pushing towards my break even, and then like Jeremy mentioned, then just didn't pull it out. Apparently, still in a downtrend. So, I mean, kind of like I mentioned last week, I like tech long term, on into the summer, into the fall. So these are positions that, I can ride it out. I can figure out how to utilize any potential continuance down. Wasn't much else other than that. I did close out because we are coming up on the 21 days to expiration. So I needed some options margin and was, in some good profit range on a handful of options for Workhorse, and decided to go ahead and close out a number of those. I still have a couple left just in case something, happens this week, but those will be closed out in the week ahead. So we'll use that as the segue to price levels, and we'll take a little case study look at Workhorse, WKHS, to talk about these price levels. So a price level, there's a whole, there's a whole lot more to it that we're probably not qualified to really dig into. But you can basically think of them as the market is obviously constantly just a tug of war between buyers and sellers, and mixed in there's also a whole lot of sentiment and statistics and algorithms, doing trades and all that kind of stuff. And so what ends up happening is levels materialize where a price is hit and a certain reaction happens. And that reaction is either resistance or support. And that's basically just where the two sides, one wins, the buyers or the sellers, and the other one loses. And so then there's a notable, normally you got your buyers and sellers fighting and things are trending and it's doing whatever, but there's always these levels where somebody decidedly wins and triggers either a buying frenzy of sorts or a sell-off. And so we can do, because this is a very important fundamental to basically any trading method, is to look at these levels and react accordingly. And the great thing about levels is you really don't need to know a lot of fundamentals of a company per se. You're looking at trends, you're looking at these levels, and you can make very educated moves based on just reading the levels, aka price action. So let's go to the screen here. So here's how I approach, and again, like Jeremy mentioned, we're just learning these things. So by all means, if we miss something, if we completely misstate something, hop into Discord, let us know. We're just, learning along like everybody else. And so, but anyways, here's how I start charting a position. So let's say Jeremy's told me about Workhorse, WKHS, and like, hey, you should check this out. I mean, that's not a hypothetical. That's literally how it started. So what I'll do is I'll load annual levels, if that's available for the underlying. In the case of Workhorse, that is, they go all the way back to 2010. So we have a decent range of scope here. And basically you want to chart the first sign of resistance. And that's where you want to put a level. And you're starting at a very zoomed out view at an annual level, because you want to look at, okay, on the maximum time frame that this underlying allows, what was the average price trend for that year in this case. And then we'll slowly.
Just chime in here real quick, because one of the things I think we take for granted is, how much does the audience member actually know? And when you say you're charting on an annual level, that 12-month setting that you have up there is your candle size. And basically each one of those candles represents an entire 12 months worth of trading. Is that correct?
Yes, that's correct. And I don't know if anybody's using TradingView. I'm not sure that 12 months is inherently available. This may have been a premium, I believe, because I had to customize to say 12 months. I think it maxes out, the free account maxes out at 1 month. So that's just to say, if you don't see it, that's why. So you could start at a month. You don't have to start at the annual, but it is helpful if you can find a way to do it. But yeah, so each of these candles will represents a full 12 months and what the candlestick was for that 12 months. So you have your low and your high, and then your wicks of spikes. So we're going to start, and the way I try to do this, so I'll go about to the top of the wick, and I'll drop a line. And just personally, I try to colorize, I don't like red. Red is the color of panic. So I start at the other end, and I'll just start stepping back colors for whatever time frame I'm looking at. And I try to keep my time frames 12 months, 1 month, 1 week, and I try to stop at a week. I don't like going any lower because then your chart gets really messy, and it's usually not necessary to go any lower than that. So I'll start at 12, and we'll make it this pink. So now I know. And another thing I love about TradingView, this chart will last. So if something's happening, news is breaking on a certain position, an underlying, I'll go load it up. If I've already charted it, then it's there, and I don't have to worry about it. I can trust my charts, and I know my colors. So whatever system works for you, that's fine. But that's just how I do it to keep things straight. So already we can see some interesting things. So this was a first. So we didn't have any data before this. This was already an instant resistance, that started up here, and then over the course of 4 years, the stock price just dropped. So that's why we dropped that line. Already we can see something interesting here, that right up here, up to January 2016. So the year of 2016, we came down, we got support in 2014, we climbed pretty big, nice healthy candle in 15, and 16 we hit resistance again. And the wicks are the body of the candle is what's most important. The wicks are outliers. So this is this tracks. So that we've charted this level, and now already 6 years later, it hit the level and it dropped again. So we can already instantly see the levels in action, and you could even, it's a little more of a stretch, but it is still applicable to say here in 2021, we've even the wick, I'll move my cursor so you can see the wick a little bit better. The wick of 2021 has already dipped almost to that same annual level. So, we're kind of already getting some understanding right out of the box of how these levels work. So we drill down to 1 month, and now we have more candles. What's most important in all of this is you need to grab the resistance candle the first time it happens, because that's the marking of the trend. So we're looking at a month. Price is up in this range. So you could follow this and chart all of these, but keep in mind where the price is at and where you think it's headed, up and down, and only chart within the realm that you actually need. And so in this case, we're at 1612 currently. I feel very confident on this annual level. Levels on the greater time frame are much stronger and more important. So if we ever refer to a level as an important level, an annual level is much more important than a 1 minute level or something, as you go down the line. So me personally, I'm looking at my monthlies here, and I'm going, all right, so from 2010 all the way through 2020, I'm feeling pretty good about just trusting this annual level. If the price is ever looking to break that, I'll come back and I'll revisit basically 1050 and under. So now let's zoom in and let's chart on this uprise here. So I'll go ahead and grab my next wick right there. Change that color, back it off to purple. And then let's drop a few more here. So next, So we hit resistance. Now we got our support. Hit another resistance. And again, these are the first time that these resistance levels are happening as to when we chart them. So,
and you're calling resistance here. You're basically looking at the fact that it's a red candle is resistance, and you're grabbing the top wick of that red candle. Is that what you're doing?
Right.
Okay.
Because as the price rises, when it goes into uncharted territory, which is why we're grabbing the first instance of a red candle, as the price rises, it's uncharted territory for the underlying. It's never been here before, and so we don't know how far it's going to go. And so it rises, we get resistance, we get a red candle, and then it drops. And so that's now a level because it was in uncharted territory. Something happened where the sellers won and it dropped. So that, at least to me, that's why we focus on grabbing the red candles, the resistance candles. So on my monthlies, I don't really like. No, that's fine. I'll leave that one there. Okay, so we got the monthlies. Let's just real quick take a look at the weeklies. I think we're probably pretty good, but one thing you'll notice here is, so now we're looking at weeks, and you'll start to as you start to chart this, you'll start to see some patterns unfold. Let's look at so let's look at this. This was a monthly, so now we're looking at weekly. So each candle represents 7 days, a trading week. And already we start to see some micro events where that monthly level is holding, or proving. And so this one we charted way back here, and in here we already see an instance where, two instances where the level was what we call this a test, where the price dropped below it, the price dropped below it. It came up to it, and it tested it. It dropped. It came back up. And it didn't achieve the level. So that's important. Probably something for a later time as to exactly how to act on that. But when I start to see things like that, I don't necessarily go into charting, weeklies, because I'm seeing the monthly hold. So in this case, looking at this, I'm not seeing anything. Here's one here. Let's grab that guy. So we come down here. Let's grab this guy, and I'm making this based on, like I said, if I don't see the prior levels, the prior time ranges holding anything, then that's where I really want to grab it. So I want to grab this guy, and we'll back him off to the next color. We'll skip that dark purple and go to blue, I think is what I do to keep the purples from being too similar. We go up. I don't need to grab that. So from here, I think we're pretty good because, again, look at this. This purple line here, we charted it based on somewhere in here, and already it's proving itself here in January 2021. We peaked up here. We came down. When we started to come back up most recently, this most recent week, we're right in line with this weekly level that was charted back here. So ultimately, I'm feeling pretty good about this chart. I'm feeling like it's pretty complete, and I can start to go to my next phase of what does all this mean on making a play. So now I would just go to my, let's look at a 1 minute chart. What I might be seeing while I'm trading during the day. Should have done that a little bit better. Let's actually back off to like an hour maybe. Okay. So basically this tells us now where things are headed and where we can place bets basically on where we think it's going to stop. And so the most recent example of this was right here. We see this massive drop, terrifying drop. And so it is good to follow the news. You don't, like I said, you don't have to follow the fundamentals of the company per se. But this is a pretty scary drop, and combination of knowing what's happening and levels, you can act on this, and you can, not be afraid of it and use it to your advantage. So Workhorse is an EV company, and they make little light duty work trucks, electric vehicles. And this whole time they've been vying for a contract with the USPS, the U.S. Postal Service. U.S. Postal Service is working to roll out EVs in all of the mail trucks. And Workhorse, way back in time, I'm not going to go back there because I don't want to mess up the chart, but back in time on the chart, there was a big tick up back in June 2020. And that was on news that Workhorse was in contention, was a finalist in contention for this massive government contract. So that fueled all kinds of hype and all kinds of buying. And then right here in January into February, I think it was actually February, this massive spike, this massive drop here, the news finally came out that the decision was made and Workhorse was not the winner of this contract. A company called Oshkosh was, and they got the contract. So obviously all of that hype money now deflates and just rushes out of this stock. Maybe goes to Oshkosh or wherever. So this also brings in a very good example of importance of levels. So we were trading way up here at the 28 range. And when that news broke in this is a 1 hour candle. In one 1 hour candle, we dropped from 28, blew through this level, blew through this level, blew through this level. And we started to slow down here. And we started to slow down here, not coincidentally enough, around this annual level. This is a very important level. So we didn't quite get all the way down there, but we slowed down, and then we started getting, some horizontal action and some stabilizing. So on this day, when this crashed, the very first thing Jeremy and I did was we opened up the positions that we talked about last week. We opened up the 1250 option calls, short puts. We sold those because the premium was really good, because this is extreme volatility, which is going to drive the prices of those that would drive the premium up on those positions. And we had the chart to show us that this is a very important level. You're always taking a gamble, but the odds were in our favor that this level was not going to break. On top of that, like Jeremy mentioned last week, the 1250, the premium put our break even. Do you remember what it was, Jeremy? It was like right around the annual level, right? Around $10.
I feel like it. Yeah, I think it was like $10. Check real quick. It was something like that.
Yeah. So that just made this a sweet, just the most premium rich example of when to capitalize here. Because we got the premium, we could even test the annual level, because that's break even. We could even survive, a little bit of testing, dip below it, maybe it rises back up and touches it. And, those are tests, and it's trying to decide, is it going to keep going? And if it keeps going down from here, then it's going to go. And so you want to get out. So you always want to make sure you have your understanding of exit strategies. So that set this play up perfectly. And then, you can see here over the next few hours, and then days, we're just riding this weekly level that we just drew. And so that's, again, when price levels make so much sense. So we tested, we even dipped back down to, not a true test, but got close to the annual level here. And now you can see that it's just hugging this weekly level that we drew, and now starting to dip a little bit below.
So the one thing I want to call out here is back when that real big drop happened, and we mentioned that we both sold puts. Basically, as soon as that drop happened, the volatility really ramped up in the stock because the range at which it's trading was just ginormous and big. So that really gave us the big premium. But since that drop, you can see the price has really stabilized around that weekly level that Mike was calling out. And so what's happening with the volatility in that period is the volatility is starting to contract. And that contraction of volatility is basically what lowers the cost of our option, which is good because we sold it at a higher price. And basically what we want is that option to lose a lot of its value so that we can buy it back for much less to close it out, or, take it to expiration when it's completely worthless. So that was one of the nice things that happened by catching that giant volatility spike as it happened.
Right, exactly. And again, that's the mindset of premium selling, is there's obviously time to expiration and volatility are two of the key things that give you that premium. And when you can jump on some extreme volatility like this, and you already have a chart, or it doesn't even take that long. I mean, you saw it. So when you can jump on a moment of extreme volatility and you can have the confidence that you do with price levels to know, all right, this is a bet, I should take it. All bets could fail, but that's the game. But there is a lot, the importance of this annual level being such an important level, the odds were in our favor. And then as soon as that price stabilized, and honestly, if you wanted to wait, you're going to lose some premium, but you could have waited until you saw an actual bounce back in price. So, you could have waited until one of these, more micro scale bounces. As soon as you see it stop dropping and, kind of come back to a level, there was still decent premium on these options. So, so I don't care what happens to the price now. Once it stabilizes, burn the clock out, buy it back, get your 40, 50, 60% back, or total of the premium you initially made, and then move on with life. And this was a premium example of the power of price levels and options in general. And then one last quick note, this has been a darling of a position to do this on, just because, now that we have these levels, you can kind of even, go a little bit more macro scale here, and you can see the price just kind of bounce between these levels. And we've used that to our advantage many times, especially this 22, 26 level here. And so it's just also validating to chart something and then just kind of leave it in a 1 hour view or something like that, and just kind of look at how the noise generally gyrates between these price levels here. So, so on that note, how are you capitalizing on these price levels?
I'd say that I still have lots of charting to learn how to do, but I thought I'd pull two of my trades up, show some of the levels that I put on. I chart them a little bit different than you. I probably should do what you do and actually go back to the annual, mark the candles, go to the monthly, mark the candles, mark the weeklies. I'm still much newer at that. So I typically only kind of look at the daily chart, and then I kind of look backwards in time to see where there's kind of price resistance and support. And one of the things that kind of drives me nuts when I watch people trade is they always show you all kinds of beautiful winners and things like that. So I thought I would take two of my worst positions that I have on and show you where I entered them and what I was thinking, and kind of go from there. So my second worst position that I currently have in my portfolio is XL Fleet Corporation. And the one thing I was listening to you talk about the levels, Mike, and I want to make a distinction for some of the viewers. You'll hear people talk about technical analysis or fundamental analysis. And this charting and basically everything that I typically do when I trade options is all considered technical analysis. So it actually has absolutely nothing to do with the company. I probably couldn't tell you very much about XL Fleet other than I think they're kind of in an EV space a little bit. But most of what I look for is all technical. So I'll kind of loosely keep tabs of the news, but fundamental analysis would be looking at more of the data of the company. So what's the earnings? What's the price? What's the ratio? What's the forecast? What's their financial books look like? All those concrete data would be considered fundamental analysis, where this, which is charting just, looking at the charts and levels and stuff like that, would be considered technical analysis. So when you hear those terms out there, that's all that really means.
And along those lines, fundamental analysis would be most important and would be a key critical metric if you're trying to get into an investment and you're trying to go really long term on a company. You want to know what's this company doing and where are they headed. A lot of what we're doing and showing you is more trader mindset, and so we don't care what you're doing long term. I just want to know where you're headed and can I do anything about it.
Yeah, it's a great point to bring up there. Because when I'm making trades, I'm really not looking any further out than like the next 45 days, maybe 60 days. It's all super short term. Well, I guess that's a relative term. For me, it's super short term compared to like an investment. And that's really where I'm just trying to see where the trend is taking it. And can I capitalize a little bit, skim a little bit off the top of that stuff is really all I'm looking to do. So right here, I pulled up XL Fleet chart. And what I've marked on this chart is basically when I entered the trade is this green line. So I entered this one on February 11th. And I originally entered it for a March expiration. I've since rolled it to an April expiration, but really what I was thinking on this day was that there was basically a level here that I drew, this top red line. And red is the line of panic, but nothing gets you motivated like a little panic. So right here, there was a big resistance here. So, I decided, hey, I'm going to draw a line here. And this line basically also correlated to some support here from the price action or the price movement here of XL Fleet. So we were coming up here on February 11th and I said, you know what? It's not really close to that line, but it's not that far away. You can see it got a lot farther away. And I said, I'm going to enter a short put position here on February 11th. I don't recall the strike. I'd have to go back and look, but I want to say it was maybe a 17 strike. The put was slightly below this line. So I thought, okay, that's the strike. It's a little bit below that line. So I was expecting either this to, continue up from here, maybe kind of bounce around. But at worst case, whenever I enter a trade, I always think worst case, what's going to happen? I always want to know what's my exit plan. How do you get out? It's how I keep mechanical. And I can't stress that enough, is that when you enter trades, really think about where am I getting out on both if it's working in your favor or if it's going against you. In my favor, I usually get out about 50% profit. When it's going against me on an undefined risk, that's, it's usually about twice the premium that I collected is the loss that I'll take. And so I just like to see on the chart, where does some of that line up? And so I colored in yellow my break even. So if I factor in the premium that I took in and the strike that I sold, basically any price that goes below this yellow line, that's where I'm going to start losing money. If I close the option out at that. So I want the option to remain above this yellow line. And what you can see here, and I threw a couple other lines on here. I don't actually remember where this, so this red line came from a resistance line back from early or late September 20. And basically it broke through that line. And so, it's trading here. It broke through this and I'm like, ouch. Okay. Well, I got this other line, which isn't that far below my break even. So, let's see what happens when it comes down and hits it. And it hit it and it kind of bounced up and I was feeling pretty good. I was like, it's holding up my level here. So, now it's coming back up. And then I'm kind of expecting this red line here at about 1850 to become resistance, which, hey, anything above yellow and I'm going to finish good. And my premium's just going to be decaying with time. Well, then it dropped again and it fell below this line. So, the next line of support is this kind of 1050 level. And it came all the way down and hit this level and kind of bounced back up. And my bailout price on this particular stock is $10. So as you can see, when I got into this trade, I was like, okay, well, I'm pretty comfortable because in order for this thing to not to work against me, I've got to break, 1, 2, 3 levels, and then that's the end of the game. So this one is I'm underwater in it because we're below my break even. This last level, about 1049 held. It's above my break even on the trade, or not break even, above my bailout price on the trade. And so what I'll do for at least the foreseeable future, as long as these levels are holding up, is I'll just roll the option forward. So at 21 days, so this week, most likely this one is going to close out, and I will sell that short put again, kind of rolling and rolling and rolling until, this price can kind of become reclaimed. And all the while, I'm going to note my basically $10 bailout price. And should we breach this level and close below it, I'm going to exit and I'm going to take a loss on this position. Real quick, I'm just going to pull up my single worst position in my portfolio is Peloton. And this one is terrible for me. So similar to the XL, I basically saw that Peloton was kind of coming back down to this level here that I had marked on there as saying, hey, this was a key level. So I sold some puts at this point, and the yellow line is my break even. I think I sold 130 puts here. So basically I'm selling, somewhere around here, which is a good distance below where I thought there would be support. I want to say I collected something like $800 some or so in premium, which, dropped my break even on these puts down to around the 122 level, which wasn't really a level. I'm just calling it out as my break even line. But my bailout price is basically just shy of $100. And this one, I'm really not feeling good about this one, honestly, guys, because this thing is just busting through down, and there is this level down here, which is kind of a loose level based on this resistance here from back in November of 20. But yeah, that's really what I'm looking at. And, my exit plan here is basically just a little bit below $100. If we get down there, I'm going to have to cut my loss and book it and make it up and use my capital for another day. But this is really where I use the levels, is to kind of try to figure out, where are my strikes? Where's my exit plan going to come in at? And I like to try to sell short premium as we approach a level. And I'm kind of doing that in anticipation that level will hold. Because a lot of times when you challenge one of these lines and then bounce off of it, you're going to get two things. One, you got the stock moving in the direction, which is going to bring your option price down if you're short the put. Two, volatility is going to decrease as the price goes up. So really, if you can catch these things as they kind of approach a level, on a bullish, should be selling a put to move on that. That's one of the approaches that I take when looking at different option plays. And the underlyings, I'll kind of look at where's the price relative to the past and the different various levels. And that's how I bring in my price levels to my trading. So I think that about brings us to the end of the content that we had for this week. I don't know if you have any closing thoughts that you want to bring in, Mike, or...
No, I mean, it's something that it takes time to best. And like I said, we're by no means experts. But it takes time. So if price levels are something that's new to you, don't go start opening trades based on, your first chart or something, go chart something, then look at it over time and get a feel like, did this work? Did these levels hold? Did it, you need to just keep seeing it and seeing it in different realms, to see, to gain confidence to then be able to act on it. And it doesn't take too long before you realize if your charts are holding, and if they're holding based on that historical view, then you can start moving forward and using that as a tool in your tool belt. It's by no means a sole metric, but it is definitely it's the hammer. It's a fundamental tool that certainly is worth mastering to a degree. So
yeah, you'll probably hear us or even see us bring up different charts, and we might mention levels or talk about levels. And that this is really what it comes down to. Is it's just one of the data points that we consider when we're starting to look at trades. For me, it's when I start considering when to sell an option. Maybe it's when I decide to close it out because I've identified levels to get out at. If a level doesn't hold, then likely, it's not going to end well for me in some cases. And other times people use them for, defining levels for all the way down to day trading in the minutes and stuff like that, which I don't do a lot of, but I know that Mike has gone out and scalped a bit sometimes before on some of this stuff too.
Yeah, so that was the other thing I was going to mention when you mentioned how you look at levels forward, back, or just on a scale where you are interested, especially in day trading. Like, keep in mind when you're looking at levels exist all over the place, and so when you're day trading, that day session, there's going to be levels that when you're looking at a 1 minute candle for the day, those levels there's going to be little tiny micro levels that appear for that day's trade. And that's kind of where you can get into some high speed scalping, techniques and things like that, where you still chart. I don't actually draw those. I just visually look at those, because everything happens so fast. But it's still, the backwards forward view that I showed is certainly where you're trying to establish very rigid, concrete pillars for a particular underlying. But always keep in mind what are you trying to do, what range are you looking at. Levels exist everywhere within proper context.
Yeah, absolutely. Well, that's going to bring us to the end of this week's episode. So remember, check us out, join us on the Discord, say hello. Love to get your thoughts and feedbacks on this episode and ideas for future episodes. We'll cover any content that any viewer is interested in asking us about. And if it's something we don't know, we'll learn about it. Chances are it's something we've probably been exposed to. No question is too dumb to ask in our Discord. So just put it out there to join us and say hello. And we'll talk to you guys next week. So remember, think outside the block.